Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks slide after China's key economic conference disappoints investors. Beijing signalling more borrowing and spending, but the details were absent. Sources tell Bloomberg the ECB expects to cut rates at both its next two meetings. This as President Christine Lagarde says Europe's growth is losing momentum. And French President Emmanuel Macron is due to name a new prime minister in the next few hours as he looks to avoid another government collapse. Happy Friday. So mixed US data, muddying the waters to some extent. You saw a little bit of selling pressure towards the end of the trading day stateside, with the S&P lower by about 0.5%. The Nasdaq 100 also moving a little lower by the end of the close. US jobless claims came in higher than expected. Inflation in terms of producer prices also ticking up. We'll bring you the analysis on those data fronts and how that is feeding into Fed expectations. Currently, European futures pointing lower by 0.3%. The ECB, of course, cutting rates as expected, 25 basis points, expected to cut again in January, possibly March as well, officials telling Bloomberg. Currently, FTSE 100 futures pointing lower by 0.3%. S&P futures stateside looking a little higher, up 0.1%. Nasdaq 100 futures looking to gains of around 78 points, up 0.4%. Largely, you would expect on the positivity around Broadcom earnings. A reminder that the strength is there, at least for large parts of that AI trade. Broadcom beating on earnings and showing the upside in terms of revenues from AI increasing more than 200% year on year for that company. Let's flip the board and look cross-asset then as investors adjust around the ECB and Fed expectations. Still, the expectation is the Fed does go again. That is pretty much entirely priced in by these markets next week, of course. Currently, yields at 4.31 on the US 10-year, so yields did edge up yesterday on that data. Euro-dollar at 104. Below that 105 level then, currently unchanged, but a little softness coming through for the euro on expectations there'll be further cuts, of course, from the ECB. Brent trading at 73.44, currently flat. Gold at 2,688, up 0.3% on the yellow metal. Let's flip the board and have a look at the Asian session then. The Kospi almost entirely wiping out the losses that came through on the back of that botched decision around martial law from the South Korean president. You can see the Kospi currently trading at 2,494, up 0.5% so far in the session. So getting back up to those gains, or at least wiping out the losses since that surprise and shock announcement from the South Korean president. An impeachment could come through over the weekend, and for some that would lead to, at least in the short term, some political certainty, or at least lack of political uncertainty. So we watch the events, of course, over the weekend in South Korea. Broadly across the benchmark in Asia, you're seeing losses of 0.9%. That ties to the China story. The CSI 300, the benchmark on the mainland, currently down 1.4%. A lack of detail coming through from the work conference and that work meeting in terms of the economic meeting, although it is expected now the deficit target could be broadened and widened next year. And that detail and number should come through in March of next year. Nikkei currently over in Japan, off by a full percentage point as well. Let's get to the politics of France, though, right now, before we move on to what is happening in China, because the French President Emmanuel Macron is widely expected to announce a new prime minister in the coming hours. Macron is aiming to forge a coalition that will last until 2027, when his term, of course, ends, and avoid another collapsed government at the hands of a divided parliament. Let's get more from Bloomberg's Phil Serafino, who's standing by for us in Paris. Phil, what do we know about the decision that confronts Macron, the time frame? We're counting down to it now. What is at stake?
So the question is, has he managed to find some sort of compromise with enough members of parliament to ensure that there will be a stable government? You remember Michel Barnier's government was voted out early December because the National Rally, the far-right party, joined with the far left on a vote of no confidence. So Macron has been trying to sort of thread this needle in parliament, come up with enough supporters who will back a sort of a coalition that can get a budget approved. And his best hope seems to be to pry the Socialist Party away from this left-wing alliance, the New Popular Front. if he manages to do that, it's probably because he's agreed to appoint a socialist or someone from the left as prime minister. But, he's wanted to do this for months and didn't succeed the last time around in prying the socialists away. So we'll see if he's managed to do it this time. And I think the suspense is total. No one really knows what's going to happen.
OK, yeah, the suspense is total. How do we expect Marine Le Pen to react? We have some fascinating reporting from your team on the ground, the kind of behind-the-scenes reporting as to what unfolded with Marine Le Pen and that standoff with Michel Barnier, of course, the former Prime Minister. What does that tell us about how she and her party may react?
Yeah, it's great reporting. Barnier sat down with her, and he thought he had a deal for her to support the budget. He made some concessions on some of the spending items in the budget, and then she came back and wanted more. And Barnier apparently wasn't willing to go that far. So the sense, I think, in the Macron camp is she does not want to compromise. She wanted to make a political statement and bring the government down. And that's all the more reason for Macron to look elsewhere for support. He was kind of counting on Le Pen and her party to help them get this budget through. They refused to do it. So that avenue seems to be closed out for him. But it's made political points for her. Whether that works out in her favor in the long run, we'll see.
Yeah, that remains a key question, doesn't it? Phil Serafino, thank you very much indeed. Joining us out of Paris on the latest. Another big day, of course, for the politics of France. To China right now, where top leaders in that country have set domestic consumption as their top economic priority for next year, trying to bolster confidence against, of course, the threat of looming US tariff increases. For more, let's bring in Bloomberg's executive editor for the region, John Liu, in Beijing. John, what did we learn from this key economic meeting about the priorities for the Chinese government in 2025?
Well, I think you put it very well, Tom. The front and center, the thing that very clearly this government wants to achieve next year is to increase domestic consumption, to increase overall domestic demand. I think what was really interesting is they sort of sketched out a two-pronged approach to getting there. On one hand, there is going to be more spent on improving the social safety net, so making health insurance better, making the pension system better. There's actually quite a high level of savings in China, and so the idea is if you improve that safety net, people will be willing to draw down that savings, to spend more. The other thing that came out across very clearly is that the government is ready to spend, is ready to borrow and to spend to achieve these objectives. One, to improve the social safety net, but two, also, if the consumer is not going to spend, the government is now saying it's ready to step up and spend and to create that demand itself.
OK, so this is a government ready to spend. What about the growth target then, John? What is the expectation for next year's growth target, and whether or not that is still the metric that is and was once so important in terms of driving the output of this economy?
I think that goal, the GDP target is still very important. It acts as a communication tool for the central government to try and telegraph to local government officials what their priorities should be, how much they should push for more economic growth, and how much they should push to increase economic activity. The target was and should have been set at this conference, but we will not get a public announcement of it until March. That being said, the consensus among economists that Bloomberg has spoken to is for growth of about 4.5% in 2025 here in China.
OK, so 4.5% may be the number we're looking at for 2025. Bloomberg executive editor John Liu with a fantastic breakdown there of what we've learned from this key economic meeting as we look ahead now to the National People's Congress in March. John, thank you. Now, Bloomberg has learnt that ECB policy makers, meanwhile, expect to lower rates by another quarter point in January, probably also in March. That's as inflation across the Eurozone stabilises and growth, of course, remains sluggish. President Christine Lagarde spoke to the press, as she does, after the meeting, about the bloc's growth trajectory. Take a listen.
The risks to economic growth remain tilted to the downside. The risk of greater friction in global trade could weigh on euro area growth by dampening exports and weakening the global economy. Lower confidence could prevent consumption and investment from recovering as fast as expected.
OK, for more, let's bring in Bloomberg's Valerie Teitel. Valerie, guide us through the market reaction then to what we heard from Christine Lagarde and this decision to cut by 25 basis points.
Yeah, what the markets heard from Christine Lagarde yesterday is that she failed to live up to these dovish expectations that had been priced into the market. Yes, she mentioned those downside hits to growth. Yes, they took out the word restrictive in their policy statement. But most importantly, when she talked about the risks of inflation, she talked to them as two-sided. She didn't focus necessarily on any mention of undershooting on their inflation target. She also said in the press conference that there was no discussion of the neutral rate. And that implies, Tom, that there was no discussion about the need to get back into expansionary territory. And when it comes to their growth projections, growth and inflation projections, there was only mild revisions lower on their growth forecast for next year. All of this was really reflected in the fixed income space in the European bond market, where we saw yields rise across the sphere. We had the German yields rising 8 basis points, also higher in France, but most notably, Tom, in Italy, the 10-year yield rose 16 basis points. That is the second biggest move on the day to the upside for the BTP market this year. So she essentially just did not live up to the market's expectations that she would come out more dovish in this press conference.
Really interesting in terms of BTP reaction then. Quite a sell-off, as you say, in terms of that 16 basis point move higher on the yield of that BTP. Talk to us about, there's a bit of a lack of clarity in terms of the data that came through yesterday stateside. I know you're going to give us that clarity, Val. What did we learn from jobless claims and producer prices?
Jobless claims came in slightly higher than expected. They are trending around the highest levels of this year. When it came to PPI, Tom, yes, the headline numbers did come in hot, but all those inflation nerds out there have noted that those components that from PPI that feed into PCE, which is what the Fed forecasts, those did not come in hot. So that really reiterated the solidifying of bets that the Fed will reduce interest rates at next week's meeting and likely head toward a pause. The focus now shifts to also the Fed will be releasing their economic projections at this meeting, which includes the dot plot. Just how many cuts is the Fed penciling in for next year? The market is currently seeing 2.
Just 2. OK, so they may have to walk back some of their earlier predictions. Valerie Teitel, thank you very much indeed. Here's what else to be thinking about then. The day ahead this Friday, 7 a.m. UK time, so counting down to this, industrial production drops for the UK as well. At 8 a.m. UK time, we're going to hear from the ECB's Villeroy. We'll see if he adds to that Bloomberg reporting. Of course, we've heard from officials they expect another cut in January, possibly March as well. We'll hear what Villeroy of the Bank of France has to say in terms of that debate. And at 10 a.m. UK time, we get Euro area industrial production. So we'll get a gauge there in terms of the likely softness, particularly with a lens on what is happening in Germany. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, Syria's next steps. We're going to talk to former Syrian peace negotiator Hind Kabawat on the aftermath of Assad's fall, what it means for that country and regional players. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Russia is close to an agreement with Syria's new leadership to maintain 2 vital military bases in the Middle East. Sources tell us the Russian Defense Ministry believes it has an informal understanding with the Islamist group known as HTS. Western officials are said to believe that the Russian bases could act as a deterrent to extremism in Syria, which really talks to the complexities in terms of the international players trying to stake a claim, of course, in this new Syria. Let's bring in some analysis right now in terms of developments on the ground in that country and the broader regional impact. Very pleased to say I'm joined by Hind Kabawat, Adjunct Professor at George Mason University and the former Deputy Head of the Syrian Negotiation Commission's office in Geneva. Hind, good morning. Thank you for joining us. What is your expectation right now? What is your level of confidence that HTS, this Islamist militant group, of course, that toppled the Assad regime with other rebel groups, will build a pluralist Syria going forward?
Thank you for hosting me. Good morning. Good morning to everybody, and congratulations to Syria and to the Syrian people. The transition happened last week. It was very peaceful transitions, and everything happened until now. It's been very safe to the civilian, to the Syrian people, especially to the minority. All indication show that there will be a unity between people, unity between the Syrian people, and we are looking for a civil state, democratic, and we have a Syria for all. It is so important to focus on the national contract between us. We are people, and Syria, it's a different. Syria, it's a mosaic country, and Syria for all. So we are watching, and we are working closely to have a few messages. There will be no revenge, there will be no sectarianism, and we're going to work together toward a better Syria.
Well, what gives you that confidence? Because HTS is a spin-off, of course, of Al-Qaeda, and they've tried to moderate that position. They're designated a terrorist group by a number of different international countries, of course. Israel is certainly concerned. What gives you? And the other point is Afghanistan is a reminder. The Taliban came into power, of course, after toppling the regime. They're promising to be somewhat reform-minded. That has not played out on the ground in Afghanistan. Many would say that is a warning.
Syria is completely different. For the last 13 years, Syrian people on the ground, we've been working very hard. We have now a very strong civil society on the ground working. It's not going to be like Afghanistan or Iraq or any Libyan scenario. We are on the ground, strong women, youth, civil societies. And so far, everything happened in the last few years. We've been having a great civil work on the ground with the Christian, with the Jews, with the Ismailis. And we have this great interfaith work. We have local faith-based mediators, women. And I do have a confidence that the Syrian people today, they are stronger than 13 years ago. In the Middle East, now we have the strongest civil society, community, and we are working together toward a peaceful transitions and to continue this, to have a political transition, to have Syria, to include everybody at the table. Everybody at the table. We cannot exclude anyone.
Yeah. Professor, which is the foreign actor to watch right now? You have US troops still stationed in Syria, about 900 of them. Turkey clearly a main backer of some of these rebel groups. Israel taking action. Which is the main, Russia with its own ports, which is the main foreign actor in terms of the influence that will come to bear on this new Syrian leadership?
I think today we need to be open, to have an open door diplomacy, to talk with everybody. We are really, we know that because of some countries, we couldn't be resilient and we couldn't stay until now strong. We're opening the door for diplomacy. We don't want, now it is a Syrian-owned, Syrian-led. We don't want to have any influence for any countries, but we're open doors diplomacy. Soft diplomacy, and we're going to have a dialogue with everybody. We're not going to close any doors because we need everybody today in our Syrian future.
Yeah, you're there in Turkey. Turkey, of course, host to hundreds of thousands of Syrian refugees. Is it your understanding that many of those refugees will be returning to Syria? Do you plan a trip back to Syria now?
I'm driving to Aleppo this coming Monday. I can assure you that so many of my colleagues and friends, they're planning to go back. Myself, I will be in Christmas in Damascus to celebrate with my Christian community. Yes, we're all planning to go. Of course, we grateful to Turkey and to all other host community who hosted our people, but we are not a refugee community. We are Syrian people. We're proud. We want to go back to build our Syria. Yes, we're planning even to open our civil society were going to start operating in Damascus and in Aleppo, in all those countries.
What is the most urgent need right now, material need? Is it international financing? Is it expertise on the ground? What is the most crucial need right now as Syria tries to rebuild?
We have three important things. Humanitarian aids, because we won't have the people, we don't want them to have need for anything. So we need humanitarian aid. We need to start thinking about how we can lift the sanction eventually, because this is going to be very hurtful for us. We want to continue having an open economics, and we want to have a real business. We have a business community in Syria, and we want to go back to be where we were 150 years ago, before the Assad regime came and took over. So we want to lift the sanction, we want humanitarian aid, and we want to have the accountability file to be active.
Okay. Hind Kabawat, adjunct professor at George Mason University and the former deputy head of the Syrian Negotiation Commission's office in Geneva. Thank you very much indeed, and good luck with that trip on Monday to Aleppo. Coming up, is Europe on track to meet its climate goals? We're going to take a closer look at the halfway mark through a crucial decade. That is next. This is Bloomberg. Welcome back. We are almost halfway through a crucial decade, of course, for Europe's energy transition, with 2030 climate goals rapidly approaching. But is the region on track to meet its targets? Here to give us an update and the details is Sofia Pirelli-Rocco, an analyst in Bloomberg NEF's Europe Energy Transition team. Are things on course for Europe?
Yeah, absolutely. So the ambition to be on track for net zero by 2050 in Europe is clearly there. EU members and European countries are definitely setting the right kinds of targets for 2030 energy, particularly. In terms of reaching net zero, Europe would need to have installed around 1.4 terawatts of solar and wind capacity by 2030. That's more than double the capacity that will have been online by the end of this year. And so our base case actually shows that we would only reach around 85% of the way to this target. So there is a gap, and that means that it will be harder for the European countries to reach their emission targets.
So there is that gap. What does Europe need to do to close that gap?
So in the near term, the focus really has to be on solar and wind capacity. The rate of installation and deployment of these technologies needs to double in the next years. And when we look at solar, that's actually quite doable. The solar industry has been going really well. We had really strong installations on the residential and utility side with cost declines. But when we look at wind, that's actually more of a challenge. And so policy really needs to intervene there on permitting reforms so that we can get online all of these projects quicker. And then also on the route to market, we need to have further incentives, economic incentives too, in some cases for wind.
OK, so economic incentives for wind, and that's something we hear from CEOs of those big turbine makers all the time, is permitting. So we'll see if they act on that to meet these targets and close that gap. Fantastic analysis. Thank you very much indeed for coming in bright and early to break the story down for us. Really crucial as we look to 2025 and that halfway mark towards 2030, of course. Sofia Pirelli-Rocco, an analyst in Bloomberg NEF's Europe Energy Transition team with the insights. Coming up, thousands of pro-EU protesters in Georgia dig in for a third week despite an intensifying police crackdown. Details next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks slide after China's key economic conference disappoints investors. Beijing signalling more borrowing and spending, but the details were absent. Sources tell Bloomberg the ECB expects to cut rates at both its next two meetings. This as President Christine Lagarde says Europe's growth is losing momentum. And French President Emmanuel Macron is due to name a new Prime Minister in the next few hours as he looks to avoid another government collapse. Happy Friday. Checking the European futures for you after a little bit of softness by the end of the close yesterday, both in Europe and the US, despite, of course, that 25 basis point cut from the ECB, as expected. European futures pointing lower by about 0.2%. Here in the UK, the FTSE 100 is dropping 18 points in terms of what's being flagged by the futures, then looking lower by 0.2%. S&P futures in positive territory after dropping about 0.3% yesterday, pointing to gains of 0.1%. Nasdaq 100 futures also pointing to gains of 0.4% after a bit of softness yesterday. Broadcom coming through with some decent earnings that support the narrative around the AI trade. So we'll see how that filters through, particularly for the tech trade stateside. Let's flip the board and look cross-asset then. You did see yields moving higher yesterday stateside on some mixed data in terms of jobless claims ticking up. Producer prices coming in a little higher than expected. 431 right now is what's being yielded on your benchmark 10-year. Euro-dollar below 105 for the single currency. 104 currently, a little softer by 0.1%. Again, the Bloomberg reporting they will go again in January and possibly March. 73.41 on Brent. Gold up 0.1%. We'll briefly check in on Asian markets as well, because over in South Korea, stocks there have all but wiped out the losses since, of course, that shock imposition of martial law by the president. Expectations that there could be an impeachment of President Yoon this weekend, which for some would lead to at least short term a bit more political stability in that nation. Broadly across the benchmark in Asia, you're seeing losses of 0.9%. Disappointment about the Dhaka detail once again out of China on that key economic conference. CSI 300, the benchmark over in mainland China, dropping 2%. And in terms of what is happening in Japan, the Nikkei down almost a full 1%. But you can see the gains there for Korean stocks up 0.5%. Let's get back to Europe right now, because Bloomberg has learnt that ECB policymakers expect to lower rates by another quarter point in January and probably also in March as inflation stabilises and growth remains sluggish. The central bank dropped wording saying that policy will remain, quote, sufficiently restrictive for as long as necessary, reflecting the fragile economic backdrop.
The latest information suggests it is losing momentum. Surveys indicate that manufacturing is still contracting and growth in services is slowing. Firms are holding back their investment spending in the face of weak demand and a highly uncertain outlook. Exports are also weak, with some European industries finding it challenging to remain competitive.
OK, for more, let's bring in Bloomberg's Lizzie Burden, who's hot-footed it back to London after standing outside the ECB and covering that reaction, of course, and the decision yesterday for us. Lizzie, was this a dovish cut from the ECB? If you pair the decision to cut by 25 basis points from what we heard from Christine Lagarde, what is the take?
Well, it wasn't as dovish as expected. We did expect there to be a cut, but when you juxtapose that with the S&B's 50 basis point cut, it felt pretty noteworthy. And actually you saw the reaction in bonds falling and traders paring bets on easing, reflecting this. But you still have investors who cannot shake the idea that a 50 basis point cut is still coming at one of the upcoming meetings, because Christine Lagarde didn't rule out a 50 basis point cut. She admitted that the updated forecasts don't include Trump's tariffs. And of course, some euro area countries are going to be hit harder than others by them. It seems pretty inevitable that the tariffs will affect Europe, even if only indirectly. And so you've got economists already saying that the new GDP outlook is too rosy for 2025, not to mention the political chaos in France, which comes back to how much stimulus the ECB is going to have to provide, probably more than the Fed and the Bank of England. And that's why you've got PIMCO and Infidelity saying that the ECB might actually have to go lower than neutral when it comes to the end point for interest rates next year. So it kind of draws the conclusion that her tone didn't match the outlook.
And we have Bloomberg, of course, reporting officials saying that they're going to go again in January, possibly in March as well. And they haven't ruled out 50 basis points, which is interesting. On the politics then, with the lens on France today, possibly a new Prime Minister being named by President Macron. Did Christine Lagarde have anything to say about French politics?
Well, as a French woman in Germany, she was going to be asked about politics. Of course, she didn't want to wade into this. The big question is whether the ECB would be willing to use the TPI, the Transmission Protection Instrument, to deal with if there is another yield spike like we saw to the Greek levels of borrowing costs. As expected, she didn't comment on the situation in France. She referred to the general political risks that make forecasting difficult. And she mentioned the snap elections in Germany next year, the uncertainties around the actions of the new government. So keeping it very broad when it comes to the politics. But again, this is the elephant in the room when it comes to that forecast for next year.
Yeah, absolutely. Lizzie Burden, thank you very much indeed, covering all things ECB for us as we await, of course, the Prime Ministerial pick later today out of France, likely, and of course, German elections. See how that factors in as well in February of next year. Now, low productivity and failure to invest have led to vast amounts of lost growth in the EU, with France and Germany, of course, as we've been discussing, in political crisis. The continent risks more lost years of stagnation, as our weekly documentary explains.
The news for Europe just keeps getting worse.
The French government collapses, plunging EU's second largest economy into turmoil.
France's political upheaval in December offered another glimpse at fractious European affairs.
Germany's under pressure and Volkswagen workers are striking hard.
In my view, we are already in a crisis mood.
Our former model is over. If we follow our classical agenda, we will be out of the market, I have no doubt.
The EU's economy is now fighting for survival and struggling to keep pace with the US and China.
Had the European economy grown as fast as the American economy over the past couple of decades, we'd be generating 3 trillion euros of extra income every year.
That's roughly the equivalent to the total GDP of France being routinely added into the economy.
Europe needs to have a digital era economy with companies that challenge those from China and from the US.
Without that, the region's at risk of being unable to afford to protect itself in a world where security is no longer guaranteed.
It's just a very tense moment for the world, and Europe's at the center of it.
OK, you can watch this week's documentary from Bloomberg Originals in full on YouTube and our website. Now, Georgia's pro-European Union protests have entered their third week amid an intensifying police crackdown. The unrest was triggered by the ruling party's decision to halt talks on joining the EU and comes as it prepares to appoint a loyalist as the country's next president tomorrow. Bloomberg economy and government editor Greg Sullivan joins us now with the details. Greg, who is likely to be named president? What's going to happen in terms of the current president? The tensions clearly on display right now in Georgia.
You're absolutely right. There are certainly tensions on display there. The next president seems likely to be Mikhail Kabawat. He's a lawmaker with the ruling Georgian Dream Party and a former football player who he actually played a stint with Manchester City. What is really notable here, though, is that this lawmaker, who's been anti-West in some of his comments in the past, is going to be replacing the current pro-European president, Salome Zurabishvili. She has actually said that the October parliamentary elections are illegitimate and said she's the only legitimate institution in the country and has vowed to remain a voice of her nation and a bridge to international partners. So there does seem to be a clash that will continue between pro-European forces and the new government, which has suspended talks with EU membership until 2028. And that's likely to continue, whether rhetorically or legally or with increased protesting.
What are the implications then, the broader implications of this, Georgia's path going forward and what it means for the region, EU-Russia relations?
That's really what's at issue here, is this path for Georgia. That was the key to the October parliamentary elections. The ruling party, which extended its 12-year rule, has been accused by the West of pursuing legislation that they call Kremlin-inspired. Obviously, after winning the election and appointing their new prime minister, or the current prime minister continuing his role, they suspended talks with the EU membership until 2028. That has spurred more protests. The pro-European president has called for for protests and said that they will continue to protest because the opposition is very much behind the country's NATO and EU ambitions. So that is very central to this. The US and Europe have been critical of the election, the way that it was run. They've been critical of the violence used against protesters. The ruling party has said that the protesters are foreign-backed. Moscow's largely echoed that, but said that this is an internal Georgian affair. So that is the key split here, and obviously has huge implications for the country moving forward.
OK, yeah, echoes, of course, of the Euromaidan back in 2013 in Ukraine as well. So some mirroring in terms of what's going on. Greg Sullivan, thank you very much indeed on the importance of watching what is happening on the ground, of course, in Georgia. Thank you. Now to Asia, where the Kospi in South Korea has closed up today, recovering losses triggered by the South Korean president's failed bid to impose martial law last week. Yoon Suk-yeol's approval rating has hit a record low of 11%, with 3/4 of respondents saying he should be impeached. Lawmakers are expected to vote on a second impeachment motion tomorrow, with at least 7 members of Yoon's party hinting they will support the move. One of Japan's top security officials says that Tokyo needs to prepare for the tariffs Donald Trump has pledged against other countries. He also told Bloomberg that he had frank discussions on tariffs with members of the president-elect's team during a recent visit to the US.
Of course, President Trump has 2 major themes on his mind: job growth and reducing the trade deficit, but rather than tariffs in an economic sense. He seems to use tariffs as leverage to achieve other policy goals. In that sense, I wonder if there will be some requests for Japan, and on that, we need to communicate with them from here on.
That was the National Security Advisor to the Japanese Prime Minister speaking to Bloomberg exclusively. There's plenty more coming up. Stay with us. This is Bloomberg. OK, switching focus now to a story of deep importance. India has a growing role in the $35 billion fertility industry. But driving that trend are impoverished women desperate to survive. Our team at Bloomberg Originals has been taking a look at the true cost of a human egg.
All my husband does is get drunk and sleep. My kids and I won't be able to eat. We've also considered killing ourselves. Sumathi took me to a clinic in Vadalur. I was too weak to donate enough blood, so I said eggs.
The Dalits are among the most marginalized groups within the Indian caste system, often deprived of quality education and jobs.
All of us women are sanitary workers. I'll get 450 rupees a day. 100 rupees go toward our food.
But these women carry something more valuable than anything among their family's modest possessions: their fertility. It's an open secret that she is the fertility agent. She's a cog in a sprawling network of agents and go-betweens across the country, profiting from the sale of human eggs. Every 15 seconds or so, human eggs are taken from a woman somewhere on the planet to satisfy the global demand for assisted reproduction. Advocates warn that India's poorest women are at the mercy of an industry that preys on the most vulnerable. For Sumati and the other women in her village, the people who make the laws feel worlds away.
Sometimes we do regret donating ovarian eggs out of haste for the sake of debt relief.
OK, that video is part of a global multimedia investigation by Bloomberg. Reporters into exploitation and opportunity in the human egg trade, and is the focus of this week's Big Take. The story crosses the world from India to Argentina, Greece and Taiwan. Joined now by Natalie Obiko-Pearson, senior reporter on Bloomberg's investigations team. It's a phenomenal piece of reporting. Thank you for joining us. In what way, then, has the human egg become a global commodity?
Well, it's really quite remarkable. The human egg today is sourced from young, fertile women around the world. It can be shipped across international borders, banked, and then sold on to IVF patients that can't use their own egg for whatever reason. It's a very fast-growing part of the $35 billion global fertility market. And it's happening in a virtually unregulated, unmonitored space. So most governments are not keeping track of this trade, and very few of them regulate it in any way. And like any precious commodity, there is opportunity and there's also exploitation.
Natalie, talk to us about the technology involved that is assisted in driving the growth of this industry with those challenges alongside.
What's changed in roughly the last decade is that a technology called vitrification came about, and that's essentially a flash freezing method. It allows you to turn the egg into almost like a glass-like state that enables it to then be shipped across international borders. 10 years ago, you couldn't do that. You had to have the IVF patient and the donor sort of right side by side working together. That is what essentially allowed the egg to then turn into more like a commodity and more of a global marketplace.
And given that, Natalie, and you nodded to this, the potential for abuse. What have you and the team found in terms of the abuses tied into this industry?
There was some real remarkable discoveries that we came across. One of the worst cases of harm that we documented was a case in India where a minor girl, a teenager, had been lured into selling her eggs to an IVF chain that's backed by some of America's most prominent financiers. In Greece, there was a case of a mother who was told by police that her eggs had been stolen during her own IVF treatment. She thought that she was only working to get pregnant for herself. It turned out that half of her eggs had been given away to another woman without her consent. We documented women traveling from places like Taiwan and Argentina being trained by companies to skirt customs and borders officials to lie to them so that they can get into the U.S. and supply the growing demand for eggs there as well.
OK, Bloomberg's Natalie Obiko-Pearson, thank you very much indeed. You can read today's Big Take on the terminal at NI Big Take Go or in the latest edition of the Business Week magazine. Right, now some other stories making news today. Broadcom shares have jumped in a late trade after it predicted 65% growth in AI chip sales in the first quarter. It sees a $90 billion market for the AI components it designs for data centers by 2027. Investors have piled into Broadcom stock this year, betting that the AI craze will fuel a sales surge. And the CEO of Klarna has told Bloomberg his company stopped hiring a year ago as it invested in artificial intelligence that's doing the work of hundreds of staff across the firm. The Stockholm-based buy now, pay later finance provider has seen headcount fall by more than a fifth during that time, mostly through attrition. It says about 200 people are now using AI for their core work. Plenty more coming up in terms of breaking out the narrowing scope of the rally for the S&P and what is next for the ECB in terms of rate expectations. Stay with us. This is Bloomberg.
I have the benefit of working with the Goldman Sachs economics team, and their forecast right now is the Fed will cut next week as well as the beginning of next year. That's mostly priced into the market. The expectation for most portfolio managers with whom I interact on a regular basis are expecting an easing cycle to continue.
David Costin, Goldman Sachs, chief US equity strategist there. And of course, the views around how equities perform in the US underpinned to some extent by the trajectory around inflation. We had producer prices out of the US yesterday, muddying the waters to some extent if you put in play as well the jobless claims that ticked up. Producer prices coming in a little stickier than some had expected. Here's the work that's been done. You think go back to 2020, of course, when inflation was not a problem and where things were, particularly when it comes to services. That's the light blue component. Then the stretch up in terms of that inflation surge that we saw before the work was being done done all the way down to June of 2023. But services have remained sticky, and that is the component that stands out. Now, Bloomberg Economics says if you actually take out the components of the PPI and CPI that we've had out over the last week, feed them into the PCE gauge that, of course, we know the Fed is focused on, then actually things look a little bit more benign. And for Bloomberg Economics, that cut for next week is definitely locked in. But the question marks do start to rise again as we push into 2025. So that's the trajectory in terms of inflation, producer prices, and the role of services, though, again, when it comes to the gauge of PCE, things should look a little bit more beneficial for that Federal Reserve. Sticking with central banks, let's flip the board and have a look at the ECB, because, of course, they cut, as expected, 25 basis points. Here's what's really interesting, though. Officials telling Bloomberg they now expect a cut in January as well, 25 basis points, but also in March for the European Central Bank. You're at 3% right now. They see a further 125 basis points. This is traders, not the officials talking to Bloomberg, but traders now expect about 125 basis points of additional cuts next year. Traders expect to see the rate below 2% by June of next year. Of course, inflation is stabilising. That's the view from officials and traders right now at around that 2% level. Then you have the weakness in the economy. Then you have the politics of France and Germany as well. Some took this as a slightly hawkish cut from Christine Lagarde. But again, expectations you get below 2% for the deposit rate of the ECB by June of next year. So that's the trajectory as you factor in, of course, the weakness, relative weakness in the euro, particularly against the pound, by the way, which has been interesting. We're looking at equities now because we've talked this year and last as well about the narrow breadth of the gains that come through from the S&P, and it's been really pronounced in the month of December. So for every stock that gained, 3 actually fell. It's very narrowly concentrated. It's the most narrow set of gains, in fact, on course to be narrow set of gains this year for the month of December, which could point to the fragility in terms of the further upside for this S&P rally. You've had 3 records for the S&P just in December alone, but again, narrowly concentrated. For some, that will be a concern. Now, at 8:30 a.m. UK time, we're going to be speaking exclusively with the chief executive of Hensoldt as the German defence company reveals its long-term strategy here in London. Tune in for that interview. The opening trade, though, is up next. This is Bloomberg.